Nic
here.
Chahine, what's going on?
I am fighting my computer is what's going on. I've been snake bit.
What happened with your computer?
Yesterday, over the weekend, my whole rig crashed, so I replaced it completely.
Oh,
And this morning, I finished the write-up just before the show, so I can get on the show, not worried about the write-up I have to do for my members. And then I hit send, and the window craps out on me. I was like, oh,
oh,
now I have to redo it. Okay.
You do
oh,
that.
that's the worst
You do that
troubles.
stuff yourself. Like you wipe it clean and you do all
Yeah.
that stuff. Really?
Yeah.
Wow. That's your electrical engineering degree coming in there. I always yell for Bert or Drew or anybody that can help me whenever my computers crash. But anyways, Nick, some volatility over the last couple days here. Have you been able to catch any of it, or you just kind of been sitting on the sidelines a little bit?
No, the way I do it is I'm already set up. So I've been, I ended the year with a lot of credit call spreads, which were short. And as the markets fell, I cashed in a lot of those. And I put in some credit put spreads and I cashed in a little bit of those on the pops. And yesterday I closed some of the credit call spreads that I had that were under pressure. For example, I had some 2075 in the SPX, and there's no reason to leave them open with Draghi coming up, so I cash in those. But I have not been doing anything big, just because the binary events that's coming, the event that's coming up with the ECB, it is a big event in my opinion. So I just don't need the drama. I'd rather have a modest January expiration than to try to start the year with a bang and end up having to drag a few losses for a couple months.
Okay, I want to get your thoughts here on Apple. It's getting an upgrade here today at Credit Suisse. We want to know all about the open interest because last week they pretty much had a perfect pin here at 112, did they not?
Yeah, last week it was pretty predictable. The way it acted, if at least for me, I lucked out in catching the exact bottom and catching when it was going to fall, and luckily we cashed in on that. This week, it's a little clearer with the levels as far as open interest. Huge resistance at 110 yesterday, so I knew that it was going to be challenged at the open, and the market whooshing down. It was almost telegraphed that. But Apple sometimes doesn't give in to that pressure. It has before, it just ran ahead in the front of pressure. But based on the open interest, 110 is a challenge, and I don't know where it is right now. It should be at that, and another line is 115, and anything in between is all small resistance, is nothing formidable. Anything lower than 110 is also small resistance, which doesn't provide a lot of support. And there's some unusual activity in the 105 that may be remnant of some other trade. But 120 is the high point of interest, if you can believe that.
120, wow.
Nick,
Yeah.
do you when you're looking at things, I know you're a lot longer term than Dennis or I, but do you look at like the pre-market trading, perhaps to try and identify a buyer or a seller? I mean, I'm looking at this Apple chart here, and I can't tell you the last time I have seen this stock find a resistance point in pre-market trading. A lot of stock trading here. It looks like someone's just making a stand here at the 110.80 level. Do you put any significance to that, or do you wait for the open? What's your go-to
I,
as far as
I usually
pre-market
wait
charts?
for the open. I'm not smart enough to be able to get into somebody's head. I did a webinar this weekend, and the presenter in front of me, I was listening to him, and he said he could identify who's buying and who's selling, and I'm thinking, pretty nifty trick. So I don't know. So I'd rather play the open market where there's volume and where I'm not going to be, like I say, we're minnows swimming in the sea of sharks and whales, and in the pre-open, there's not so many other fish swimming, and that's I'm not going to be out there swimming. I'd rather swim when the ocean is filled with other little fish, like me. So I'm not the target. So if he can really identify who's doing it, I don't want to be out there. So, but Apple, if you look, you can draw a trend. I wish I can upload the chart I'm looking at, but I couldn't log into the Benzinga, and that's what blew out my write-up. I was trying to log into
Ooh.
Benzinga, and it blew out my market buy.
Oh, Benzinga's fault.
Yeah, it is. But there is a kind of a channel that started sometime in June, and if you connect most of the tops without that funky little party hat that took it to 120, and most of the bottoms without the extreme of the mid-October, you can draw a parallel channel. And yesterday's candle negated the past two candles that were touching the top of it. So the top of it, we'll put it somewhere in the 113 area. So that's where the battle is going on right now. But the lower end of it is like the 107.50. So they're ping ponging up and down in that channel.
Nick, we talked about Google, and you had asked me about my short position there, and I had told you that when it came back down to 500, I was going to cover because I missed the opportunity last time. I don't know. I mean, I had out to March on it, so I don't know. Can't really lament taking a profit on it. But you said that you were licking your chops. You were waiting for the $500 level in Google, and maybe start building a long position. Are you following through on your game plan?
I stopped yesterday, and I'll tell you why. I can't see what you guys are looking at, but if you want to pull up the Google
Okay,
uh, chart for 2 years, and you'll see why I stopped.
2 years.
Uh, 2 year Google chart, and look at where yesterday's candle came close to.
Okay,
What's below that? On the left hand side, say somewhere around 10, 21, 2013.
nothing.
There's a big void. It's we gapped up on that earnings report, and here we are touching the upper end of it. What if it drops $7 or $8 more? Then what's going to happen to that gap? I'm not sure. So I'm not jumping in.
Okay, all right. So you're kind of, and would you wait maybe for, on strength if you're not trying to pick a bottom in it, or you looking?
Yes, if they show me that they can defend that level successfully, I mean, so far it's been tested twice, and we're still getting lower lows in the past couple of weeks. So I'm not so certain they're going to hold it for what is that level for 80 and for 90, I should say, eyeball, for an 88 maybe. I want to see them defend it emphatically on the volume and say, nope, this is it. We're going back to 520 on the Google L. And 520 is where the technicians will start saying, okay, we see a breakout of the lower highs that it's been putting in, and maybe they're looking for 540 after that. But right here, it's a gutsy catch if you want to catch it, and you'll probably get paid handsomely. But there's a big chance of if it fails, and if the markets fail, I mean, oil is what 44. I'm not so convinced that we suddenly shrug off the low oil. I thought yesterday we sold off on low oil. So if oil is in the 40s and dropping, and what if the oil hit the three digit on the left hand side?
Ah,
Ah,
Our our markets are going to be happy? I don't know.
what do you think about? I'm looking here. Earnings are the 29th. What I would love to see here is a nice any kind of rally in this Google, and then go into the weeklies. I'm not sure what day the 29th falls, but and the reason is that I think that their advertising revenue is really going to be down. I think that Facebook and Google are cutting, or Facebook and Twitter are cutting into their market share on that. That has been their big driver for the earnings and the growth. And I just think, and I'm going fundamental here, guys, so you may want to totally discount this, but I always go on the technicals, but I just think they're losing out on some kind of market. I mean, even like a small blip, and I'm not saying they're still not going to be the dominant search engine and have most of the advertising revenue, but isn't there a point? I mean, you always talk about Twitter, the potential in Twitter. Obviously, Facebook has not, given in on anything. I mean, to me, fundamentally, unless they get that car out that no one's going to drive because you can't drive it in the snow, I mean, where's there a driver for future earnings growth in Google?
That's the point. I'm not worried about their earnings. I think they're still, like you said, the dominant beast in the arena in which they play. But if I remember correctly, way back then when we did gap up, it was based on a change in the oh my gosh, they are printing money, kind of like an epiphany, everybody, and that oh yeah, their prospects are looking so great, and they're going to figure out mobile, they're going to figure out this, and they're going to figure out that. So they may, like you said, price all of that right back out, and it'll bring them back to the 440 area, which is still before the split, that's an $880 stock. I mean, it's nothing to spit at. And I remember that day, I made a lot of money on the lotto ticket. I was holding a naked position in 980 calls, and it was at 880, and the next morning it opened at 980.
wow.
So 33 cents turned into like $7 or $8. It was a total fluke. I had no science behind it. So I may do the opposite this time, to just for as a lotto play and a few $100 just on a complete debacle, like you said. I'm not expecting it. I still like the company long term, but if they want to punish them, I want to be there to catch it. Because where is the positive news going to come from? I'm not sure. Maybe
Nick,
they say they're buying Twitter, but even then they're going to get hit because they're spending, a zillion dollars.
Nick, just go into the lotto plays a little bit because we haven't talked about it for a while here, and we probably have some new listeners here who might not know what you mean by lotto play. So, can you just explain, maybe, run down maybe one of your recent lotto plays and how they work?
Okay, a lotto play is basically it's like a lotto ticket. It is a small price that I pay for something that has a low chance of success, but if it does succeed, it's got a decent payout. I mean, instead of using a recent one, I mean, we can look at Google and see if we can do a lotto play on that one. I'll tell you,
Okay.
when do they report? January what?
I got the 29th here.
So it'll be the expiration of January 30th expiration.
So you're playing a lotto play off the
So
earnings.
so I'll go to January 30th option chain and I look up the puts, and you can see they're pretty expensive. The 440 put is like $3. So they're no longer playing this game of allowing me to get a cheap lotto ticket. So let's see what I can do though. It doesn't mean that I can't play it. It just means that I have to pay up a little bit more. The lotto ticket is not a buck; it's a little more, basically. So if I wanted to guess that in January they're going to drop, and I want to try to capture that drop, I'll just buy a put spread somewhere in the low 400s, and then sit back and wait. I can pay, looks like 30 cents to buy the 435, 430 put spread. So I would buy the 435 put for January 30th and sell the 430 put to lower my entry point, and I will pay 35 cents for that. My maximum gain is $5 minus what I pay, so $5 minus 35 cents, and then I sit back and wait per contract. If indeed it drops to that level, that 35 cents will turn into dollars.
And
Right.
this is kind of opposite from your normal trading strategy where you're
Yeah,
kind of writing lotto tickets, with the
right.
credit
Normally,
call
like you said
spreads.
last time, I sell the lotto ticket.
Yeah,
But here I don't want to be the gambler because it is gambling. When you're playing the earnings, you're gambling. And
right.
even I've said it before, but I'm going to say it again. Even if somebody hands you the P&L of Google and the statement they're going to say, you never know how the market is going to react to it. So where is your insight on that? You're just guessing how the market is going to react to the numbers. Even if you actually are the CFO of Google, you're not going to know how your price is going to move unless you have an event like, oh, we're doing this, but that's rare. So you're still gambling. It's a complete coin flip. And so I don't invest into earnings. I take small trades like this.
And one quick point too, you don't necessarily need it to go to those strikes. I mean,
No,
if you get a $50 drop down to 450, then they're gonna you maybe
yeah,
get out for a buck 20, a buck 30. You're
right.
not
There,
looking to realize the entire value by doing that, but allows you to put on a position with limited risk, and you're just looking for a movement in it.
there,
Go ahead,
there are
Nick.
two ways of doing this, Joel. You can pay up only 30 cents and guess the direction and guess the magnitude of the drop, or you can pay a buck and be closer to the money, so higher, like 480, 485, and guess the direction and not need to worry about how far it's going to drop, and you collect money. So there are two ways of doing it. You can pay up for a premium lotto ticket that where you only need to guess up or down, and then you immediately participate. But let's say you guess down and you're too far down, you don't profit. You guessed the right way, but you didn't guess the right distance.
And guess what way I usually play it?
uh,
All right.
I don't want to guess. No,
We'll give you a break, but the wrong way?
No, I guess the right way. Actually,
I had to throw it a little zinger at
actually,
you there,
when you were
Joel.
talking about when on the monthlies here in Google, I remember that too, and I can't remember where it was trading, but I did. I went way out of the money. I can't. Do you remember when it was trading when they had that huge gap up? Because I think it was at like 900 and a gap up to 950.
880 to 980.
Yeah, yeah, and I went like just a strike out far enough on the weeklies where it had a huge gap up. My option moved like a buck, and I'm like, okay, that's great. I went too far out of the money. But let's move on to Priceline here. And I know you've been talking about skepticism with Priceline, what's going on, tying it to a lot of the ills in Europe here. This thing is, I mean, are you ready to buy this thing and when it gets to three digits, or is it going to stop ahead of that?
I'm itching, and same as Google, if I pull up the 2 year, it stopped me from jumping in yesterday because look at the candle yesterday. If you draw a line at the last three lows, the lowest lows, it kissed all three of them and then rocketed higher. So if I were to gamble on the markets in general, because price line I don't believe has any obvious price line issues. So the sell-off is coming on the Malays in Europe, and they may have been pricing out a Draghi move on January 22nd. So if that's the case, then it may have some downside to go. But it has three emphatic rejections of that price level before, and debit call spreads could pay. I have not done them. I am not brave enough to do credit put spreads in them, which is also bullish. But if I were, I would definitely go under 1,000 for those, as low as possible. I like the company, kind of like Google, but I don't know if they're going to come out with some sort of announcement. And I did not like the price action. It's red candles, big red candles on volume. So either somebody knows something that I don't, or choppy waters ahead in Europe is scaring people out of it. So it does not. I'd rather miss a few bucks upwards. And sometimes when you miss a few bucks, you really miss a few bucks with that because it runs fast. But I don't mind.
We're on the line with Nic Chahine. He's a MarketFi maven. He's also the author of Creating Income with Option Spreads. He joins us every Tuesday to discuss this week's options outlook. Nick, before we let you go, we're trading up again in the S&Ps and the futures markets. Had the same scenario yesterday. Do you looking for follow through on this? What's your gut? Because I know you like to play the extremes, and we couldn't be more stuck in the middle here. So just wanted to get your outlook for the open.
Couple of weeks, I told you the markets are lined up to play between 2000 and 2050, not closer to 2100, based on the open interest. And it's still the case. 2000 is still the high point. Yesterday, I said it's going to drag us down, and it got us down, but 2050 is decent upward magnetic, so it's going to help maintain the balance. And more importantly, 2025 is also still an interesting point for the options market. So 2025 is likely to be a little sticky. I'm not chasing pops, if that's what you're asking, because what changed since yesterday? Nothing. In fact, it got worse. Rates are under 2, the 10-year. Bonds are still rallying, and oil is still in the toilet. So why are we running?
Okay.
If we're expecting a headline, maybe, but I don't trade headlines until they happen.
Okay. All right. Nic Chahine joining us here on Benzinga's pre-market prep every Tuesday to discuss the market and the week's options outlook. Nick, always great speaking to you. Have a good trading day. We'll be back at you next Tuesday.
Thank you very much.